Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Financial markets are struggling to make sense of the US Fed's latest rate cut rationale, one that looks infused with new White House politics. First up this morning, the US Central Bank cut its policy rate by 25 basis points to 4.25% as expected, despite noting that American inflation is somewhat elevated. It is their first reduction in borrowing costs since December 2024. They said they saw economic activity moderating in the first half of the year, with job gains slowing and the unemployment rate edging up. But they still called their jobless rate low. At the same time, they noted inflation has moved up. But their economic projections show they expected inflation over the next year to average 3.4%, higher than the latest CPI level of 2.9%. For some reason, this rising inflation and low unemployment was the basis for cutting their policy rate. Like many core US institutions, partisan politics is now infecting the Fed. Keeping the pressures under cover, the Fed's press release was unusually short this time, likely papering over the pressures that were brought to bear. It looks like the only dissenter was the recent White House injected member. Financial markets have reacted, however. After being lower ahead of the decision, the S&P 500 went volatile and is back tracking slightly lower. The bond market also went volatile and changed its course to push yields higher. The US dollar fell, and the dollar index is now at its lowest level since February 2022. And gold pushed up to a new record high and then fell back. None of these reactions show confidence in the Trump pressures on the Fed. Meanwhile, US mortgage applications jumped sharply last week, a week that included the US Labor Day holiday. Mortgage interest rates dipped 10 basis points in the week, and borrowers who needed to refinance rushed the opportunity, but new borrowing not so much. However, American housing starts tumbled uncomfortably in August, down far more than was anticipated to be 8.5% below July levels and 6% lower than year-ago levels. New house building consents came in at 11% below year-ago levels, so it is unlikely their house building industry will recover anytime soon. Overnight, Canada also reviewed its policy interest rate and cut them too, largely as expected. That takes their key rate to 2.5%. They see a weakening in the resilience first shown by Canadian reactions to their bullying from their southern neighbour. They are watching Canadian consumers and businesses become more cautious. In Australia later today, we'll get the August labour market report, where another small gain in jobs is anticipated, up 22,000, and their jobless rate is expected to hold at 4.2%. The US Treasury 10-year yield is now at 4.07%, up 4 basis points from yesterday at this time, after some bumpy volatility. And the price of gold will start today at $3,658, down $29 from yesterday, post the Fed. And American oil prices a little change at just under $64.50 a barrel, while the international Brent price is firmish at just under $68.50 a barrel. And the Kiwi dollar is now just on 59.7 US cents, down 25 basis points from yesterday. Against the Aussie, we're unchanged at 89.6 Australian cents. Against the euro, we're down 5 basis points at 50.4 euro cents. That all means our trade-weighted index starts today at just over 66.5 and down 20 basis points from yesterday. And the Bitcoin price starts today at $115,997 and down 0.4% from yesterday. Volatility over the past 24 hours has been low at just on plus or minus 0.8%. Join us at 10:45 a.m. this morning for full coverage of the New Zealand second quarter GDP result. Financial markets are expecting a 0.3% dip from the first quarter and no year-on-year economic expansion. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.